Traders, let's have the conversation about those damn banks. We have to. In fact, some nights I wake up, especially when tech was rallying every day, and I say, man, if only the banks would participate in the rally, which they did not, and they are not. And I'm looking at the XLF, which makes up your big U.S. banks. Banks like Goldman Sachs, JP Morgan, Citigroup, Morgan Stanley, and Bank of America. And let's not forget Wells Fargo, that Warren Buffett just sold some shares in after being long for a long time. That didn't work out, Warren. So here in the XLF, price got rejected at the big white line. That's the 200-day moving average. And it does look glim. In fact, the market S&P down about 85 handles today in the SPOOs. That's the S&P futures. And the banks, yes, they've bounced off the March lows. I'll give them credit, but didn't everything. But they look crappy. They do. And when I look at Wells Fargo, for example, the dividend yield. Funny. That dividend yield where it had a one-time trend line break, it did not last. I don't care what the stock dividend will pay you. If a stock goes from 54 to 24, I don't care if it pays a dividend that makes unicorns fly. Or do they? But horrible. There's really no denying that in analysis for banks. I mean, there's not. Even the best bank, which I would say is Jamie Dimon, CEO of JP Morgan, it barely can hold $100. And it got rejected at the 200-day back in June 5th. So I venture off. I say, well, if U.S. banks suck, what about other banks? So I look at banks like HSBC. 52-week low today. I look at banks like AIG. Nothing. I mean, a nothing pattern, we'll call it. I look at banks like Credit Suisse. A break of the 200-day moving average today. I even look at Deutsche Bank, where we can argue that there's a lot of funny business going on there. And that chart actually looks decent. We could probably contribute that to the bounce in the overall German DAX, but still nothing that I want to participate in. I mean, for that, put your money in a money market account if you want to see returns like that. So I do venture off, though. So I started looking at regional banks, which is the KRE ETF. I like regional banks. I really do. I think if there's some upside, I think regional banks. But the problem is they don't have that trading revenue that banks like Goldman Sachs, Morgan Stanley have, and therefore they've been suffering. Price did not even approach the 200-day moving average in the KRE. And we have seen insider buying like in Fifth Third Bancorp. Just nothing really much has happened. We've seen some Regions Financial. Not much has happened, still down from about 16, 17 to 11. So the one bright spot, and this is to end the video with some hope. Hope for the banks. Does that go in the same sentence? Is Ally. Sounds like a Ally Financial, ALLY. Online bank, Ally Financial here, and it's had a massive fall from grace. I think when I think of Ally, I think of like a cute blonde girl. Maybe that's what I'll have dreams of next because the banks won't bounce. But, the Ally was very, very stable. It was for a long portion of 2019, obviously prior to the coronavirus, around $30 a share. Had a massive sell-off. I mean, absolute tear with volatility going through the moon here. And it just broke, actually, the 200-day moving average to the upside. And there was some leap call buying, meaning players were going out in time, buying call options, getting leverage. But, I mean, I can't even get excited about this right now. The stock's down 3.5% today, and I get it. The S&P futures are down 82 points right now at about 2.5%. But it's very dim for the financials here. Maybe we'll have some light when earnings start to come around, and maybe Jamie Dimon or Michael Korbach can shed us some forecasts that will change the turn. But I look at bonds, TLT, the 20-year Treasury bond, and it's holding up quite well. If bonds hold up, bonds usually trade inverse to the banks or the financials there. And then I look at something that doesn't get mentioned enough, and that is the Japanese yen. You can look at the FXY ETF if you don't want to look at the 6J contract. And the FXY is really holding up. The yen is normally a flight to safety in the market, so usually when there's market volatility, we often hear of call buying in the VIX or people rushing to VXX. But look at the yen as well. If we have the yen break down and bonds break down, we can have that inverse correlation, have financials move up. But man, nobody wants to own the banks, and maybe this will be the low. Maybe it will, and we'll have the greatest rotation ever out of technology and some of these growth names into banks. But I think the hope is very, very low. I will say too, and I keep rambling about this, but I was just looking at PayPal. Names like Square and PayPal, if you consider them banks, well, technology banks, they've had a good run, but even they're coming down. So if the big technology financial firms out there are falling, what does that mean for your bank around the corner, your Bank of America, if the economy is not roaring again? Like, subscribe, and I'll catch you on the next video.